Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. A big beat for UBS. The Swiss lender smashes expectations with net income almost doubling estimates. We will hear from the bank's CEO in the next hour. The tale of two AI fortunes. Google's bet on the technology sends cloud sales sky high. But chip maker AMD slumps as its AI revenue grows more slowly than some had expected. Plus, Kamala Harris warns a second Donald Trump presidency will bring, quote, chaos and division. Her opponent lays into her record on border control. We will have the latest on the US presidential campaign. Happy Wednesday, everyone. So the earnings story front and centre with the beat coming through from UBS. We await VW with the earnings report at 6:30 UK time. Currently, European futures lower by 0.4% after some modest losses yesterday. Worth noting that the Nasdaq composite racked up a fresh record high stateside. Alphabet powering through. Post hours, some strength coming through. AMD, the forecast a little disappointing, even though on the quarter, AMD did beat. FTSE 100 futures currently pointing low by 0.5%. A massive day for the UK with the budget finally from Rachel Reeves. The details on those tax hikes and cuts, potential cuts to spending. S&P futures then currently pointing to gains of 0.1%. Nasdaq futures edging higher by 15 points. Let's flip the board and look cross asset. It's been the worst month, set to be the worst month for US Treasuries in about 2 years. The US 10-year currently at 4.24. The assessments about the strength of the US economy, expectations as well, the build-up to that vote out of the US with the election, of course, front and centre, leading to the sell-off. Yields currently at 4.24 on the benchmark. The pound in focus today on that budget, the drum roll beat to the expectations around that and the details from Rachel Reeves. Could be some volatility around the pound. Watching gilts as well. How much sensitivity in these debt markets to higher borrowing from this government. 130 currently on the pound versus the US dollar. Bitcoin breaking through on close to fresh record highs. 72,000 on expectations that possibly Trump could win this election. Certainly that's the view from some betting on that cryptocurrency. Gold close to records as well. In fact, adding 0.3% so far in the session on the yellow metal, currently at 2,781. Let's get back to the earnings story right now, because just 15 minutes ago, the earnings dropped from UBS, posting third quarter results that broadly beat expectations, but warning of headwinds ranging from the US elections to falling interest income. Let's bring in Bloomberg Senior European Finance Editor Jeff Black for the details. Jeff, good morning. What stood out to you from these numbers from UBS?
That the estimates were too low. No, in fact, it was a really solid quarter across all the business units. We saw that lending income has held up, even when an atmosphere of falling interest rates. We've seen that elsewhere this quarter, but also UBS did quite well in keeping their costs down. The investment bank, deal makers, and advisory and the markets unit, they did well. Global wealth management, that did very well, even with slightly lower interest income there. And even the non-core unit, which is where the Credit Suisse stuff is held, that posted a loss that was lower than expected. So pretty pleasing for them all round. However, headwinds.
Yeah, talk us a little bit more through those potential headwinds then, Jeff, that were flagged, and where are we in terms of building the Credit Suisse business into UBS? What is the current time frame on that?
Right. So on the headwinds, I think it's a theme that we're seeing elsewhere, which is interest rate reductions in the US, in the euro area. They're beginning to feed through. It's as simple as that, and there's a pretty mechanical relationship. The bank did warn about the risks from geopolitics and from the US elections, although it's not entirely clear whether that could be good or bad for the bank, because in times of volatility, the investment bank does well, clients want to shift their portfolios. In terms of the integration, UBS is well ahead of schedule. What they're doing now is moving clients over onto their systems. They've done large parts of that in Asia. They're doing it in Switzerland, and they should be finished that into next year. So they are reporting solid progress there.
Okay, making progress on that integration ahead of schedule. Jeff Black on the earnings story as well for UBS, Bloomberg Senior European Finance Editor. Jeff, thank you for your time this morning. We're going to hear from the UBS CEO, Sergio Amotti, at 7 a.m. London time. So stay tuned for that interview on the back of that very solid beat then for UBS. Talking the earnings story, we have the giant, the chemicals giant, of course, over in Germany, BASF, with that big exposure to industrials and autos, essentially in line with the estimates is the top take, I would say, for BASF. The redhead as well, they expect to reach the low end. BASF expecting to reach the low end of their full year adjusted earnings forecast range. So holding that forecast, but expected to come in at the low end. And again, in terms of the earnings, coming in just modestly above the estimates, but broadly across multiple metrics, largely in line with expectations for a company, of course, that's faced those supply chain challenges and that exposure to a slowing Chinese economy. Let's cross over, talking of China, to Asia right now. Avril Hong standing by in Singapore for a check on the Asian markets. Avril, what's standing out to you this morning?
Yeah, I mean, to your point, Tom, we are seeing Chinese equities, the weak link in Asia today. And this is on a day when Japanese equities are the outlier. They are helping to cap those declines on the region's benchmark, held along by some of the gains in the chips, the banking names, but also on what you're seeing in the Chinese, or rather the Japanese yen. Overall, it is a story of relative weakness. I mean, you think about the BOJ decision that's due tomorrow, but perhaps more importantly, the guidance from Ueda-san, and given the US and Japan election uncertainties, it seems pretty unlikely he's going to provide clear guidance for a December, January rate hike. So that's what we're seeing in terms of the Japanese currency expectations. But as I said, it is China that is the weak link. Today, for a second session, CSI 300 is down. Let's flip the board and take a closer look at how it has fared in the past 2 months. It has erased gains for the month of October, pulled further away from the peaks that we saw earlier this month. A lot of this has got to do with the stimulus optimism that's just fizzled out. I mean, we have reports that Chinese authorities are mulling 10 trillion yuan in fiscal stimulus, but that 6 trillion yuan number that had previously been floating around was part of this potential fiscal stimulus package. So yet more a cause for disappointment. And then you have the CSI 300 in terms of some of the companies that have been reporting, and more than half of them have reported. It's looking pretty negative, downside surprises. Flip the board again. I wanted to talk you through this chart because next week is not just about the US election or the Fed. There's also China's NPC. The top legislators are meeting. And you can see here the 2-week implied volatility on dollar offshore yuan. It's shot way above what we see on 1 year, which tells you that currency traders are expecting a lot of big swings. Tom.
Yeah, really important to flag, as you say, that major event out of China and any additional details on that stimulus effort. Avril Hong in Singapore, thank you very much indeed with a breakdown in the Asian markets and looking ahead to next week. Now, to the tech story and the earnings front. Another Magnificent Seven member dazzling investors as Google parent Alphabet beats expectations. Chipmaker AMD, though, slumping after its fourth quarter revenue forecast misses, and a sign that its AI sales are growing more slowly than some had anticipated. Let's bring in our tech reporter, Annabelle Drulers. Annabelle, let's start with AMD then, because top line for the current quarter, the most recent quarter, it was a beat for AMD. But as we said, it's the forecast that seems to be the disappointment here.
Yeah, that's right. And I think it sort of speaks to just the amount or the scope of the expectations that are on these AI chip companies to deliver. Because, yes, to your point, we actually saw AMD doing better than expected in the third quarter. And they also said that they're looking for around $5 billion in sales from their so-called AI accelerators this year. So that's the hardware that powers these AI tools or contributes to the training of them. But exactly what really disappointed investors, as you said, it came down to the forecast, because the company said for the fourth quarter, they're essentially expecting $7.5 billion in revenue. Now, $7.5 billion, that's from the company. What Wall Street analysts had been expecting was for 7.55. So it's close, but obviously not good enough. And you did see that after hours slump there. Again, it's sort of that story for AMD. They compete, as you can see here. Take a look at their sort of chips growth versus the main one in the space, which is really NVIDIA when it comes down to AI chips. And AMD just continues to play catch up, but they're obviously quite a far cry at this time.
Yeah, and they would be hoping to sell into a company like Alphabet, one of the hyperscalers, of course. And when it comes to Alphabet, the earnings on that front were a solid beat, Annabelle. What kind of stood out to you from the numbers coming through from the parent company of Google?
Yeah, well, exactly. You mentioned the cloud there, and that really was sort of what stood out to everyone. But you think about sort of cloud infrastructure and who's the main ones in this space. Well, firstly, there's Amazon, there's Microsoft, and then there's Alphabet. And when people talk about cloud infrastructure and cloud services for AI, it's just that pie, but that pie keeps expanding, and so companies can continue to gain a larger market share. This was certainly the case for Apple, or Alphabet rather, in the latest period. They came in with revenue at $74.6 billion. That was better than what had been projected of $73 billion. And you can see here cloud are beating there. But also advertising, subscriptions, platforms, devices. Across the board, we did see some strong numbers coming through. The question, of course, is how long that optimism around AI and cloud continues to drive growth for the business. And this was obviously something that came up in the earnings call. The management team was asked about this, and they did say that, yes, on the one hand, we're scaling the business, we're seeing greater efficiencies, we're continuing to gain further market share. On the other hand as well, they are looking at headwinds from cost and depreciation. So the big question really is, how does Alphabet manage that going forward? But right now, you look at the margins for the Alphabet or the Google Cloud business in particular, 17% in the latest period. That was versus expectations of 10.4%. They're clearly making a lot of money from this business.
Yeah, that margin gap is significant, isn't it? 17 versus 10. Our tech reporter, Annabelle Drulers, with a great breakdown there of the earnings from AMD and Alphabet. Thank you. To UK politics now and the economic forecasts going forward on the back of this budget then. A pivotal day for the UK. The Chancellor, Rachel Reeves, expected to unveil, of course, a major package of tax hikes and extra borrowing today. The much-anticipated budget will play a big part in setting the tone for British politics for the rest of the decade. Let's bring in Bloomberg's Lizzie Burden for the details. Lizzie, remind us of some of the changes we are expecting from this key budget.
Well, if we go right back to July and the electoral campaign, you remember that Labour made some really lofty promises, Tom, just to get into government. So they said that there would be no return to austerity, whatever that means, that there would be no tax hikes on working people, whoever they are. And yet we're expecting today to see just how far Rachel Reeves is willing to stretch those definitions to plug this £22 billion hole in the public finances that she keeps reminding us exists. So we're expecting £35 billion of revenue-raising measures, including a rise in national insurance contributions for employers, not employees, employers, and that's been dubbed the jobs tax. It would raise about £20 billion. We're expecting rises in capital gains tax and inheritance tax, which are controversial, given that Labour said that they had no plans to increase taxes beyond what was scoped out in the manifesto. But the point is that Rachel Reeves really wants to make sure that spending day-to-day is covered by tax revenue, and she's made promises to increase spending, for example, on the National Health Service. Beyond that, for the longer term, she's laid the groundwork for a change to the fiscal rules so that she can borrow to invest. That would be about £70 billion over the next 5 years. And the question for the Office for Budget Responsibility, as you mentioned, the fiscal watchdog, is going to be the extent to which that means she can actually grow the economy, because Labour's top priority is to grow the economy by 2.5% annually.
Yeah, and the scrutiny from that watchdog and what do they say around this extra borrowing will be consequential for the gilt markets as well. We know they've been sensitive. There's been a bit of a sell-off. That leads us to a question around the role of the Bank of England and how closely they're going to be scrutinising this budget, given their next meeting is next week.
Yes, exactly. And we have to ask whether that hammering gilts took last week is the extent of this. Is the pitch rolling that Rachel Reeves has done enough to quell a market reaction today? We do not want a repeat of the mini-budget, which was only 2 years ago under Liz Truss. As it goes for the Bank of England, it comes back to this question of whether the OBR sees this budget growing or squeezing the economy. Markets currently pricing a 25 basis point cut in November. Our economists reckon that this budget will amount to a fiscal loosening, and that means that the BOE is going to take rates lower but at a slower pace, despite Andrew Bailey, the governor, dangling this prospect of more aggressive rate cuts. So that will be interesting. As I say, the target is 2.5% growth a year. Labour could frame this as they need to stay in office for more than 5 years to get to 2.5%, and they need a decade of national renewal. So let's see where the OBR comes out.
Yeah, they'll have to address that hammering they've had in the polls as well. But of course, they've got a number of years to do that. Lizzie Burton, thank you very much indeed on a consequential day for the UK leading up to that budget. We're going to have special coverage, of course, of that UK budget from 12:30 p.m. UK time. Lizzie Burton will be across all of that with some great guests as well throughout the day, so stay tuned. Coming up, the countdown to the US election is on as candidates, of course, ramp up their attacks on each other ahead of next week's vote. We're going to bring you the latest next. This is Bloomberg. Welcome back. Less than a week ahead of polling day, Democrat presidential candidate Kamala Harris has argued a second Donald Trump presidency would be steeped in chaos and division.
America, we know what Donald Trump has in mind. More chaos, more division, and policies that help those at the very top and hurt everyone else. I offer a different path, and I ask for your vote.
Harris spoke at the same spot where Republican nominee Trump rallied supporters on January the 6th, 2021. That led, of course, to those chaotic scenes. Let's bring in Bloomberg's Derek Wallbank for how this campaign is unfolding in the last and final days. Derek, what challenges does Harris still face on her campaign?
Well, Tom, look, it's a razor's edge right now, a week out, and you've got 7 key swing states that we've all identified for more than a year that are going to sort of determine who wins here. And across those 7 states, right now, polling averages have every single one of them very, very tight. So it's hard to say right now which way this goes. You can read good things into it if you're the Trump campaign. It looks like their voters are coming out in force in the early votes, particularly in places like Georgia, like Nevada, like Arizona. At the same time, if you're the Harris campaign, you are polling a little bit better in places like Michigan. And additionally, we're seeing a pretty wide gender gap here. And when you say something like a gender gap, you do have to note that women tend to vote a little bit more than men. So the idea that women are voting a little bit more for Harris, men are voting a little bit more for Trump, if that evens out, that's probably good news for Harris. So depending on how you read some of these early tea leaves, you can kind of get a little bit either way, which is all to say it's a little bit too close to call.
Yeah, indeed. So that's the case on Harris and how things are evolving. And certainly that gender story is going to be potentially really consequential, isn't it? When it comes to Trump, campaigning in Pennsylvania, a key swing state, clearly. What is the latest there on his campaign?
Yeah, Tom, I think the key swing state. Look, if you were going to ask me which one state to watch, which one state do I want to know the outcome of, I'm going to tell you it's Pennsylvania, right? It's critical to both of their fortunes. It's hard to see a way for Donald Trump to win if he doesn't win Pennsylvania. It's hard to see a way for Kamala Harris to win if she doesn't win Pennsylvania. Not impossible, but very hard. Most of their paths do include those states. Now, Donald Trump is a little bit on the defensive. He had a rally at Madison Square Garden just recently where several of the comments that were made from the podium by Trump, but particularly by allies of his who were put on stage by his campaign, have come under deep scrutiny. Kamala Harris has particularly made issue of one set of comments about Puerto Rican voters, of whom voters of Puerto Rican heritage are, maybe 500,000 in the Commonwealth of Pennsylvania. It's not a small number of people, as well as quite a large population in places like Florida, as well as in New York, where there's a bunch of key House states. So Donald Trump has been on defensive there. At the same point, there were some comments that came out early in the morning, your time, by President Joe Biden, where he appeared to call some of Donald Trump's supporters garbage. There's a debate about whether or not he was speaking about one person or a bunch of people, but that's something that I've seen Republican members of Congress as well as Trump himself try and turn to kind of stanch that bleeding a little bit. So right now, I think you would have said the last couple of weeks it had been a little bit more on Donald Trump's terms this campaign. Right now had been on Harris's terms coming out of the weekend. And certainly that rally that she had at the Ellipse near the White House was one that was very, very well attended and will be one where she was hoping to set a positive tone and a contrasting tone with Trump going into that final week.
OK, Bloomberg's Derek Wallbank with a granular take on this US election campaign and that deep expertise. Derek, thank you very much indeed. Bloomberg News, by the way, strategists and reporters will be participating in a live blog Q&A and answering questions from Bloomberg subscribers on what the US election means for their money, the economy and businesses. You can email your questions to bloombergqa@bloomberg.net. And you can watch the Q&A at TLive Go on the terminal and on the Bloomberg.com website. Coming up, Standard Chartered tops estimates and vows to return at least $8 billion to investors by 2026. That's an upgrade to the buybacks and the return of cash to shareholders. We're going to speak to the company's CFO shortly. Stay with us. This is Bloomberg. Welcome back. US job openings fell in September. They fell to the lowest since early 2021, running counter to the September employment report and other data that point to a strong labour market in the US. For more, let's bring in Bloomberg's Valerie Teitel to unpick what is going on with the jobs market of the US. Talk us through what your reading is of the JOLTS numbers of yesterday then, Valerie.
Look, Tom, the market was relieved that we got some weak data on the labour market in the US. We've had a string of hot data recently. This one was the first one in a while to come in on the downside. It was a big miss when it comes to the job openings numbers. We expected to see a tick up in those job openings in the U.S. We actually saw a tick down. Now, as you mentioned, the JOLTS data, it is a volatile series, and the respondents from the JOLTS data is a low percentage. So we look to Friday's payroll report to confirm or deny this JOLTS data. We also have the private payroll number today, the ADP. The market will be watching that, too. But if you flip on the board, we also got consumer confidence data out from the U.S. yesterday. Now, this showed a almost conflicting picture, Tom. We saw the largest rise in consumer confidence since 2021. So another largest jump in 3 years on consumer confidence. So these are showing conflicting stories of the U.S. economy. But if we look at how the U.S. 10-year yield traded during these data releases, Tom, we were way more focused on the more weak labor market hints that we got from that JOLTS report. The U.S. 10-year yield traded all the way up to 433 yesterday. After this data, we did rally nearly 10 basis points. We're trading at 424 right now. We do have some more data out from the U.S. today. It's U.S. GDP, where we do get a hint of the third quarter PCE.
OK, Bloomberg's Valerie Teitel, our markets reporter, on some of that key US data, giving us some clarity there in terms of what it means for these markets. Valerie, thank you. Coming up, Standard Chartered rallying in Hong Kong after the bank topped estimates in the third quarter and ramped up its share buyback plans. We're going to speak live to the company's CFO. That is next. This is Bloomberg. Plus, Bloomberg terminal users already messaging us with questions and comments, but we'd like to hear from all our viewers. So we've put together a short online survey. Click the QR code on screen now to tell us what you'd like to see more of on Bloomberg TV and anything you would change. Your feedback will be used to make the best programmes we can, we promise. Plenty more coming up. Stay with us. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. A big beat for UBS. The Swiss lender smashes expectations with net income almost doubling estimates. We will hear from the bank's CEO in half an hour. A tale of two AI fortunes. Google's bet on the technology sends cloud sales sky high, but chipmaker AMD slumps as its AI revenue underwhelms investors. Plus, UK Chancellor Rachel Reeves looks set to unveil billions in tax hikes and extra borrowing. We will preview the first Labour budget in 14 years. Let's get back to the earnings story. It is a massive miss for VW. Third quarter operating profit coming in at 2.86 billion euros. Well below the estimates of 3.9 billion euros. VW posting its lowest profit margin since the pandemic. Third quarter revenue coming in at 78 billion euros. The estimates had been for 76 billion, so that's in terms of the revenue for VW. But again, operating profit, a huge miss. VW still sees full-year automotive cash flow of about 2 billion. They had estimated 3 billion. So in terms of expectations around cash flow, well below the estimates as well. The operating margin taking a hit, 3.6%. The estimates had been for 4.3%. No doubt executives will use this huge miss in terms of the operating profit to push their case that they need to close at least 3 of the factories in Germany. We know the conversations with labour unions will continue today. Those negotiations continue, of course, to be fraught. And this is a company, of course, facing that competitive threat from China and a slowing picture when it comes to the demand outlook for electric vehicles. So that story, consequential, we'll get more details on that for you shortly. In terms of the economic front, on the macroeconomic picture then, the GDP dropping for France, coming through in terms of quarter on quarter. The most recent quarter, it's actually an increase from the survey. So quarterly GDP out of France increasing 0.4%. The survey had been for an increase of 0.3%. In terms of year on year, you're seeing an increase of GDP growth out of France, 1.3%. That is year on year for growth out of France. In the third quarter, the surveys had been for 1.2%. So a slightly better picture on the growth front for France. Let's get back to the markets right now. Of course, continue to weigh up the earnings story. We have the beat coming through from Standard Chartered. We will unpick that for you. We have further earnings crossing from GSK, the drug maker in the UK, later in the day. European futures currently pointing lower by 0.2%. FTSE 100 futures off by 0.4. S&P futures looking to gains of around 0.2%, and Nasdaq futures on the 100 at least looking to add 46 points after the Nasdaq Composite had a fresh record yesterday. Let's flip the board and have a look. Cross assets, what's happening? We're scrutinising the pound in the lead-up, of course, to that crucial budget out of the UK. 130 on the pound. The US 10-year, by the way, at 4.24. A little bit of movement into treasuries after what has been a challenging month, of course, and the sell-off has been there. Bitcoin close to record levels, up 0.1% so far in the session. Gold pushing to further highs, up 0.4 on the yellow metal. Let's get back to the earnings story with a focus on the banking space. Standard Chartered shares in Hong Kong higher today after the bank topped estimates in the third quarter. The company is also vowing to return at least $8 billion to investors by 2026. That's despite declining global interest rates. Joining me now is the CFO of Standard Chartered, Diego De Giorgio, who joins me in the studio. Diego, thanks so much for your time. Congratulations. Decent beat from Standard Chartered. The return of cash to shareholders, the expectation you can get to $8 billion by 2026. That's up from a previous target of $5 billion. What gives you that confidence? And is there an expectation internally that maybe you could do more than $8 billion?
So we, in fact, have indicated at least 8 billion.
What does at least mean?
More than 8.
OK. So double digits? Is that possible, double digits on the buyback?
We'll see. It's a bit early for a 3-year plan to do that. We have returned $2.7 billion of capital to our shareholders between dividends and share buybacks this year so far. And what gives us that confidence is the strength of our business across all areas. It's a business that is firing on all cylinders. I mean, top line this quarter up 12%, bottom line up 30% year on year. that gem of a business that is our wealth management business up over 30% this quarter after having been up over 25% for 2 quarters in a row. 71,000 new to bank clients, 10 billion of net new money attracted to our wealth management business. That's what gives us the confidence to up not only our target of distributions from 5 to 8, but also our target for 2026 return on tangible equity from 12% to towards 13%. And in the short term, our target for revenue growth this year to towards 10%.
What is driving that growth in the wealth unit, and where do you see the opportunities as you push into 2025?
So very much a combination of secular trends in the markets and the nature of our clients. So clearly the growth of the middle class in the heartlands of Standard Chartered, the Asia, Africa, the Middle East, is a phenomenon that is continuing to unfold. Estimates of $80 trillion of wealth in Asia by 2027. I mean, that's clearly a very powerful secular trend. From the point of view of our clients, we offer to our clients a very wide spectrum of products, and we cover our clients as they grow with us from their first savings all the way to the private bank. And it's graduating up in that continuum and being close to our clients across their cycle of life that is the strength of the house.
How big could this business get for you in, say, the next 2 to 5 years?
Look, it's growing right now at the kind of rates that I told you. Those are not rates that you can sustain in the longer run. But we've already indicated that we think the historical rate of growth, which was high single digits, is clearly a thing of the past. We are now into the double digits, and that gives us confidence about the future.
And you talked about hiring potentially an increase in terms of wealth managers, relationship managers for the wealth unit, maybe trying to increase that by 50%. What does that mean in terms of numbers, in terms of additional headcount that you're looking at?
So that is really at the heart of the sharpening of the focus on our wealth management business, which is a place where we have been winning already, as we have discussed, but where we can do a lot more. And so we're going to invest $1.5 billion over the next 3 years, which is a doubling of our existing internal plans. And we're going to invest in 3 things. We're going to invest in people, relationship managers.
How many?
We don't disclose the number of relationship managers we have for competitive reasons, but you can imagine 50% is, on one hand, obviously an important increase. It's also about 10% a year over 5 years. So it's something that we can do. And we offer relationship managers a very interesting proposition because our clients are very loyal to us. Our clients very often see us as either the only or one of the few international banks in the countries where we operate. And as a consequence, we have a very interesting proposition for these relationship managers.
Okay.
On top of that, we also invest in technology and products, which ought to help us attract more of them.
So that's on the investment side. Fit for growth, which is part of the program, which seems to be paying off right now for the bank. The cost cutting is expected to accelerate next year. Is that the right way to frame it? And where are those cuts going to come? We talked about the investment piece. Where are you going to be prioritising the reduction in costs for the bank next year?
So let me separate for a second cost management, which on an ongoing basis we do day in, day out. And you've seen in this quarter our cost grew by only 2%. So we're clearly good at controlling costs. But Fit for Growth is more than a cost program. Fit for Growth is not a cost program. It's a transformation program. It's a way of simplifying the way that we do business, standardizing it, making not only easier to do business with the bank, but also easier to work at the bank for our people. So it's an investment in our people. It's an investment in the skills of the people. That is what Fit for Growth is. If you think about it, Fit for Growth is as much, of course, a program that will create efficiency as it is a program where we're going to be investing.
Can you give us some specifics on that for next year, though?
So we have guided that for this year we are going to be investing about $200 million in Fit for Growth, and next year we'll see the bulk of the investment with a tail in 2026.
Okay, talk to us about China. The constant question around that real estate market, your exposure there. You took a small impairment in terms of commercial real estate, about $6 million across the business, relatively small. But that challenge is still there for that economy. When do you see a turnaround in the China story and Chinese real estate?
So China clearly went from drip-feeding measures of stimulus to now putting out a very concerted package. And actually next week, with the meeting of the Standing Committee of the NPC between the 4th and the 8th of November is going to be seminal, because that is what can activate the big weapon, which is the fiscal policy. And you've commented on that before today on Bloomberg TV. The stimulus clearly is showing its impact. It's early days, but we see it in our wealth management business and we see it in our corporate and investment banking business. When you think about our business in China, never forget that our business in China is less affected by the growth of the domestic GDP, because about 1/3 of our business with China is domestic business in China, and 2/3 is really affected by the flows of capital and trade that go in and out of China, where the diversification of supply chains and the changes in the corridors of trade and capital very much plays to our strengths.
Talk to us briefly before you go about the lending environment. You started to see some green shoots in terms of that lending demand from your clients. How does that story evolve into 2025? And to what extent does that offset a lower rate environment and the pressure maybe on net interest income?
It is very much the story of what the big interplay for 2025 will be between the pressure on interest rates and the growth of demand for credit. Now, demand for credit, we've added about 5 billion of customer loans during the course of this year. But it's lower than one would expect. It's lower than what is the natural, very healthy growth of credit demand in our footprint, which is usually in the region of 5%. That is what we need to see next year in order to counterbalance the impact on the margins.
OK, that's going to be a crucial story for 2025. Diego, thank you very much indeed. Diego Giorgio, the Standard Chartered CFO, on the back of that beat in terms of the earnings story for Standard Chartered, upping the expectation around the buyback story. $8 billion is the target by 2026. The stock in Hong Kong up more than 3% so far in the session. Now, in less than half an hour, we're going to stay on the banking space and bring you the UBS CEO interview. Sergio Amotti, of course, on the lender's latest earnings. It was a beat there as well. Do not miss that interview. That's at 7 a.m. London time. And tomorrow we have an exclusive interview with both the CFO of BBVA over in Spain and the chief executive of Sabadell. No doubt M&A will be part of the conversation there. This is the potential tie-up, of course, between the two Spanish lenders comes under scrutiny. Coming up, Volkswagen's operating margin shrinks to the lowest since the pandemic. We discuss the troubled automakers' challenged future. That is next. But first, Bloomberg Terminal users, they're messaging us already. Questions and comments. We'd like to hear more from our viewers. We put together a survey online. How kind of us. Click the QR code on screen. Tell us what you think, what you'd like to see more of on Bloomberg TV. Anything you change, apart from the anchors, of course. And your feedback will be used to make the best programmes we possibly can. That's our ironclad promise. That's a shot of London for you. Isn't it beautiful? Plenty more coming up. This is Bloomberg. Welcome back. Volkswagen's third quarter operating margin shrinking to its lowest since the pandemic. Let's bring in Bloomberg's Oliver Crook for the details. Ollie, walk us through these consequential numbers out of VW.
Yeah, Tom, just pouring through the numbers here, just days after we got that news that they're hoping to close 3 factories within Germany and cut jobs and, of course, cut pay. Here's what we got for the third quarter in terms of the numbers from Volkswagen. Their sales came in at 2.1 million. That is down 8% this quarter. Operating results were down, Tom, 42%. And when you focus on the sort of key metric here, profitability, margin, return on sales, that came in at 3.6%, Tom. That is down from 6.2% last year. And when you dig into the individual groups of this business, because they obviously have the core, the mass market, the higher end, and that sort of thing, the sort of core, and this is where all these cuts have been focused over the last few days, where there's really a huge cost problem. That margin came in at 2%, Tom. And when you look regionally at what we got from Volkswagen here, sales in North America, those were the region where we had an increase of 4%, down in Western Europe by 1%. And again, the year-to-date sales in China, and this is, of course, the focus for everybody, down 12%, Tom. So overall, again, they pre-release a lot of these numbers. The market is braced for bad news, but this is really exceptionally bad news, particularly when we have Volkswagen engaging today, again, re-beginning the negotiations on wages with the unions.
Well, yeah, and executives have already come out on the back of these numbers and said this highlights, I'm quoting from the chief operating officer, this highlights the urgent need for significant cost reductions and efficiency gains. To your point, to what extent are the challenges of VW symptomatic of the challenges of this German economy?
I think to a very large degree, Tom, and we may see that illustrated a little bit later today when we get the German GDP figures. We're expecting another quarter of contraction, albeit a small one, down by 0.1%. That will be 2 consecutive quarters, which of course we know triggers a technical recession. But the broader point here, Tom, is that basically this is an economy that will contract again this year. That will be 2 years of contraction. We have not had 2 years of contraction. It's happened one time in Germany since the fall of the Berlin Wall. And the other concerning dynamic that we have here, Tom, is that while growth is coming down, we're actually expecting inflation to pick back up. We're going to get those numbers out throughout the morning. We're expecting inflation in Germany to go up to 2.1%. That is higher than what we had last month at about 1.8%. So when those numbers cross, we're going to be really digging into them to see where the sort of inflationary pressures are, where the deflationary pressures are, because we have seen to a certain extent, Tom, a lot of consumers pulling back in the German economy. Where that is concentrated is what we'll focus on later today.
What is the challenge right now around trade when it comes to Germany and China and those EV tariffs?
Yeah, so listen, those are now live. So this is something that we've been talking about now for about a year, Tom, when we began this investigation, the EU into the Chinese subsidies for the EVs. And now, as of today, we have the EV tariffs. They are now officially imposed on the Chinese auto market. So these are tariffs that range from a sort of 35% for SAIC as the highest sort of end, and then down to sort of Tesla, which, according to the EU, has benefited the least from subsidies, an 8% tariff there. These are now live. The question is, what will happen next? We know that there are going to be continuing negotiations between China and the EU. Those negotiations failed to deliver a deal, and thus we have these tariffs being imposed. The question will be, Tom, critically, is retaliation, right? We've already had retaliation on brandy. That is sort of directed at France. There are investigations on dairy and cheese that will be directed towards the Netherlands, Denmark, Germany, and of course pork, which will be in a focus on Spain and Denmark. So the question is, when will they hit back? And this could, of course, make an even worse situation for the German economy.
OK, Bloomberg's Oliver Crook on another busy day out of Germany with the big miss coming through from VW. And looking ahead to German GDP. Ollie, thank you very much indeed. There's plenty more coming up. Stay with us. We're going to give you a preview of the earnings story when it comes to technology. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Wednesday. Head in the clouds. Alphabet certainly delivering when it comes to the cloud unit. Really solid numbers coming through on the earnings front. Pre-market then, in terms of after hours, I should say, gains of almost 6% for the parent company of Google. Its investments around AI, this hyperscaler, starting, it seems, to pay off. And the advertising part of the business, when it comes to search, less challenged, it seems, by some of those competitive threats than maybe some had expected. Interesting to hear from executives saying they will continue to ramp up spending on data centers, on those GPUs, on those chips for AI into 2025. But markets, so far at least, rewarding the top line, a solid beat coming through from Alphabet. Talking of the tech story, Microsoft reporting later today. The focus there will be on Azure. That's their cloud unit as well. Expectations from some analysts out there that there's plenty of room for all of these competitors in the cloud space to grow. But you focus on Azure. You focus as well in terms of what's happening when it comes to the implementation of AI in terms of some of their services and software and products already when it comes to Microsoft. And this is the look in terms of revenues, the estimate of $64.5 billion. Let's flip the board and have a look. The preview around Meta, of course, the parent company of Facebook. They've got a hardware play as well. So look for any developments when it comes to innovation on headsets, for example, and details. Their estimates that revenue estimations will come in. The revenue estimates of above $40 billion for Meta. The digital spend, that touch point, of course, on that economy, the US economy most importantly, and of course, to what extent they are continuing to spend on generative AI. And are they able to monetize that? Let's flip the board and have a look at that very UK-centric story. It is all about the budget, of course, the drum roll leading up to Rachel Reeves and this really consequential moment for her and the Labour government. The first budget, by the way, for this Labour government, of course, they've been out of power for a long time. The first budget in 14 years. Expectations that there will be tax hikes, spending cuts as well, but changes to the fiscal rules. Really consequential. We watch the sensitivity of the gilt markets as well on that major announcement. Going to have special coverage, of course, of the UK budget starting from 12:30 p.m. London time. In just a few minutes, it's the opening trade. We're going to hear from the CEO of UBS. Stay with us. This is Bloomberg.